What's going on, guys? This is Aaron from Departures Capital, and we're here with John Feneck, CEO of Feneck Consulting and Portfolio Manager in the mining sector. It's always a pleasure to have you back on. John, how are you doing today?
Thanks a lot, Aaron. All good here. How about you?
Yeah, I'm excited to be chatting with you about gold because I have been following it very closely. And
Sure.
yeah, I just would like to know what you've been up to since we last spoke.
Oh, well, let's see. I think we spoke in September. So I was, at Beaver Creek in Colorado for that conference, which was outstanding. We saw somewhere between 20 and 30 CEOs there. I went on to Denver Gold after that, saw a bunch of other CEOs in the mid to larger cap space. The theme at both of those was quite different. I mean, the junior space, there was a lot more energy there. In the mid cap to large cap space, some of the producers have been really hit here. So it was kind of a more I wouldn't say downbeat vibe, but it wasn't upbeat. You know what I mean? And then, of course, shortly after both of those things, October 7th happened with Israel, and so it just changed the dynamic for gold once again, which we can get into later in the show. But to answer your question directly, I've been talking with a lot of clients over the last 4 weeks as to what this means for their investments going forward, what it means for gold going forward, what it means for the world. It's going to be a rougher road than we expected globally, I think, as we move forward.
Definitely. So, we've got one final upcoming Fed meeting this year, and the current probability is like 9% for another rate hike. So hopefully no more rate hikes. But what's your opinion on the current situation with the Fed and rates?
Yeah, exactly. So that CME Watch Tool website is really helpful for your listeners to check out. It's free. You can check that December 13th meeting right now is a 9 to 10% probability, just like you said, of a quarter hike in December. And that was down significantly, Aaron, from the November 1st Fed meeting, which we went into around 22%. So over the last three business days, we've seen a massive drop in the probability of a hike. That's why you're seeing the broad market rally. And, gold and gold equities, silver and silver equities are going to love that too. I mean, if we're done by the Fed, that is huge. I'm not 100% on board with that theory just yet because we've got January still looking like a live meeting at around a 20% probability, right? So, like, I want to see, more definitive verbiage coming from Powell that, he's fully done. When I listened back to his comments after listening to them live on November 1st, I didn't take away as much of a dovish kind of stance that it seems like the broad market did. Because he kept saying we have to be true to our 2% mandate on inflation, and we're not nowhere close to that right now. So I guess it's just, Aaron, like as an investor, sometimes you have to play percentages and you've got to think ahead to say, okay, how much more can the Fed really do here? We've been saying since March of 2022 on shows like yours, as well as Kitco and other big shows, that like the Fed means business this time and be aware of that. And so you have to position for that. Now we've kind of changed our methodology or thinking to say we're near the end, right? Like that was the beginning, this is the end. Like we don't know where the end is. But another quarter point, who cares? Like it's whether it's January, March, May, it doesn't matter. Like it's not going to make or break, investment decisions, in my opinion.
For sure. I feel like he's going to hold on to that hawkish tone to the last second, but we will see. When it comes to gold, we love to chat gold, but you mentioned that gold was going to make a higher low this year, which it did. What do you think about gold going into 2024, along with gold equities? Are you looking at anything? What are you doing?
Sure. Yeah, just to reiterate for those that have followed me on your show, we talked in January even of this year that 1790 to 1800 would hold. It got really close to breaking and held. If you remember, it tested there in late January, I think three different times, and then just took off. And it broke 2000 to the upside. And if you remember last fall, September, October 2022, we were at 1615 a couple of times, right? I mean, that is a much higher low that we've made this year. Although, when you talk to investors, they're pretty disappointed in gold equities performance, right? And rightly so. I mean, it's been a pretty average to below average year in just about every gold name. So that's, I think, the biggest question I get, Aaron, from clients is like, what is this disconnect that's happening between gold equities and the price of gold? So first, let's take the price of gold into next year. We've been saying on your show for the last 2.5 years that we don't own any gold, right? And there's a reason, because I'm positioning into gold equities for what I think is going to be an all-time high that's made in 2024. So we have, gotten more bullish on gold as a result of two things, major things this year. One is the financial crisis that we had in March. That was real, right? That put another floor on gold, in my opinion. That's why we saw it trade at 1900 plus for so many months in a row. And now this October 7th news in Israel and the conflict that's developing in the Middle East. I mean, that is another floor on gold, and for that matter, oil, and other things that will, benefit in a world that may be moving towards a bigger conflict. So, that that said, I mean, it just makes good sense to look at what the broad market has done over the last 15 years, right? Like March 20 of 2009 was the low. And if you look at what's happening right now in the broad market, it's kind of like certain sectors are still pretty euphoric. And that kind of attitude, I think, needs to back off a bit, in the sense that we just had the S&P crack the 200-day moving average to the downside right before the Fed meeting, right? I mean, like, that could have been really detrimental, correct? Like, the Fed was hawkish on November 1st. The S&P would have just kept going down, down, down. Like, I mean, it got a lift because it perceived Powell to do something to kind of like make more of what we call a dovish pause, as opposed to future hikes, right? And kind of cleared the deck a little bit. But yeah, I think next year is going to be a great year for gold, and so we're positioning for gold equities. And I'll give your listeners a reason for that, because we kind of get shelled sometimes after these things record. If you're at 2,000 gold, right, guys? I mean, at 2,100, what is that? It's less than a 5% gain. Why am I interested in buying something like that unless I really need like a store of value, right? I get that mentality. But like right now, I'm just saying, hey, I can buy some gold equities that aren't going to go up 5% in a $100 move in gold. They're going to go up 20 to 30%. I want that leverage to the underlying price of the metal. And so we've been buying stuff like Cartier Resources, which is ECR in Canada, ECRFF in the States. I love what Philippe has done with the company over the last 2 years in terms of acquiring more land from O3 last year, have them as a nice large shareholder alongside of Agnico right now. I just think that when you look at their August news, the second bullet point on their press release talks about, hey, the 2.4 million ounces of gold that we've already identified may only be 25% of the overall. Like, now, again, you can't extrapolate and multiply 2.4 million by, 4, but you can say, hey, it's going to be bigger than 2.5 million, right? And when you get to 3 million, companies like O3, Agnico, all these mid and large cap names start circling juniors, right? Because 3 million ounces is sort of like a key number in their mind to get more interested in joint ventures or just a pure takeout. So I think that's one to watch. US gold is another one that we just added to recently here in full disclosure in the 320s. It's trading around 325 a share right now, so right around the same price. USAU is the ticker. It's on the Nasdaq. It has an amazing share structure. I've known the company now for 3 years, going on 4 next year. And I mean, George came out of retirement to do this, right? That doesn't always make it a win. But when a guy who has that kind of experience comes out of retirement to manage a company, that's always a positive. Then you look at the share structure, another positive. You look at where the jurisdiction is. It's called U.S. Gold. I mean, it's Wyoming and Nevada and Idaho. So they're going to permit their Wyoming project, and that hasn't happened in Wyoming for many years. I think that permit could happen next month in December. It could happen in January of 2024, but investors aren't going to have to wait very long. So we're positioning ahead of that, because I think that analyst would be forced to, come up with more reasonable valuation on the stock as a result of that. That's big. In the silver space, because I want to talk about gold and silver today, mostly, Aaron, because I think these are the kind of things that will help your investors and your listening base in a time of crisis. If we get to a more tenuous situation in the Middle East, you want to own gold and silver and related. You don't necessarily want to own industrial metals to the extent that they're not going to protect as much, right? So silver equities, we talked about Aftermath on your show before. I'm meeting Michael next week actually in Zurich for the presentations we're doing there at the conference. But Michael, and Ralph have done a really nice job of just continuing to put out news when they have it, not putting out some sensational stuff that I see at so many juniors. They're taking their time with it, and that is frustrating to some investors, no question, because some investors just want that, that security blanket of news every 2 to 3 weeks. I mean, look, call him, call Ralph. Like these guys are very accessible. That's something that we do all the time. I talked to 11 CEOs last week. It's not like they're going to call me. I'm making the outbound calls, right?
Mhm.
So you can get an update from them, and I think you'd be impressed. They've got 140 million ounces of identified silver already. What happens if they come back with their metallurgical results and they see that they've got more, opportunity for manganese than they previously thought? That's something that I'm watching with the stock because that could be a real catalyst for some new buying. So those results should be out, before year end. So again, another short wait. And lastly, I'd say Silver X is something that, people are just completely gaming right now, the wrong way. I mean, I think people are either shorting it or selling it based on the fact that they have to do a raise. That may not be untrue. I mean, I haven't talked to Jose, the CEO, probably for 4 to 6 weeks, but the bottom line is here's a 14 to 15 cent US stock that is a producer already, that all three names I just gave you guys, those aren't producers. Those are explorers or developers. This is a silver producer. When silver goes from 23 to 25 to 26, 28 to 30, which is going to happen probably next year, and test those different resistance levels, this stock is going to have massive torque because it's already producing. And if you look at their September 19th news, I think that was very positive. They went back into production right away. They've reduced headcount, which is going to help their quarter. So I'm expecting a decent quarter from them.
That's some great information. So as we move into November, which is usually time for tax loss selling, I mean, it's already been quite a year. How do we capitalize on this opportunity?
Sure. Tax loss selling is something that I disagree with most of my peers on because many of them will say, well, hey, look at all this selling. It's already done, right? Not necessarily. You always have some nefarious party, and then sometimes not nefarious, but someone who just got over their skis with their buying, right? Like, or they got into a junior, maybe let's say 2 or 3 years ago on the IPO, and now their hedge fund is imploding. They're going to have to get rid of stuff, right? And they have to do that before December 27th or whatever the deadline is going to be this year, right? So like the period of time between mid-November and end of December, let's call it, we buy consistently, Aaron, every single year with the idea that one, we're going to hold certain names like we just talked about, the core names, and just buy them more cheaply and add to our position. But we're also going to trade on the periphery. So something like USAS, right? It got completely bombed out last week on earnings. It got down to 24 cents. I think it's at 25 and a half now. I mean, why not buy that at 24 and in a better silver market in Q1, sell it for 30 plus? I mean, like that's a trade, right? We don't advocate trading stuff, by the day, by the week necessarily, but over a course of a few months, hey, that's how our performance is halfway decent, right? Because we are adding two names like that on dips and then saying, all right, this isn't a core holding for us necessarily, so we've made some good money, let's take it. Let's take a profit. I think investors need to do more of that. And so I would encourage people to sit at their computers and try to get some things done here between mid-November and end of December, because there's going to be some great buys. I'll just give you an example, um, two examples really that are both lithium, exploration plays. Lithium, as you and I both know, if you look at LIT, for the ETF world, that has been in a downward spiral for many, many weeks in a row, right? And as such, the shine has sort of come off some of these lithium names a little bit. But that doesn't mean that they're bad or something went wrong. You have to look again under the hood as to where these companies are based and what they're planning over the next 1 to 2 years, not the next 1 to 2 months, right? And Jonathan Buick over at Champion Electric has done a fantastic job, I think, of getting on the road the last 2 weeks to two different conferences and marketing the story. Yet the share price has been doing this, right? And so that's when you call Jonathan, like I did this past, 3 days ago, and say, hey, what's going on? I mean, I know you're working hard, but the share price is still declining. And he just said, hey, there's been a big seller out there, right? So we went on the bid and bought more. And we were on the bid again today. So we're going to keep, verifying our thesis with every company, Aaron, checking in every month, every 6 weeks, making sure that something hasn't changed when we see some selling, and buy more, right? I mean, that's how you lower your cost basis and make some real money. And lastly, another proximity play that we like is Spark Energy Minerals. I've talked to Peter Wilson, the CEO there, in June for the first time. Was very impressed with his game plan over the next year. Again, another year from then, not another month, right? Juniors have to take some time to develop. This story is one of those stories. It's a proximity play in Brazil. They've got, two major names. If you look up Atlas and Sigma, that are right near, their land package, right? And when you look at those companies and how large they are, this is easily the second or third largest land package in Brazil, yet it's trading for pennies. So again, when you look at that as a value manager, you say, well, lithium's real, right? It's pulled back, but am I going to pay up for this major over here? Or X kilometers down the road, why don't I buy Spark, who's trading at a ridiculously low valuation? So um, that's the kind of work that we do here, all year. But really during tax law season, we take the opportunity to touch base with people like Jonathan and Peter to just back up our story.
It's going to be an exciting 2 months, John. So we'll have to have you back on, in a little while to talk about everything and see where gold's at, what happened with the Fed. So many things to watch, but it's never a dull moment in these markets, especially now. So
Nope.
Appreciate having you on, and yeah, look forward to having you back.
Thanks a lot, Aaron.
If you like these videos, kindly hit that subscribe button and the bell for notifications. Drop us a comment down below. We'd love to hear from you. And finally, always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. Furthermore, this video may or may not have been sponsored by the companies that we've profiled within this video, and we may or may not own shares of any of the profiled companies in this video. If you want to know the full disclosure details, check the description down below along with thoroughly reading our disclaimer. Thank you so much for watching, guys, and I look forward to seeing you in our next video.